We're talking about Brisbane tonight. There's been still a little bit of talk around if there's any growth left in Brisbane. There's been a lot of talk in previous years about the lead up to the Olympics, and there's been a lot of exodus predominantly from New South Wales and Victoria into Queensland over the COVID years and even sometime after that because of affordability, job creation, and overall good value for money as well. So there was a fair amount of people moving from Victoria and New South Wales into Brisbane predominantly, and other parts of Queensland like Sunshine Coast and Gold Coast. And I actually know friends and colleagues that have moved there as well. So we'll talk a little bit about Brisbane and whether there's any growth left in Brisbane, especially in the lead up to the Sydney Olympics as well. Just a word of warning, this is not financial advice. This is my advice disclaimer. Anything that we talk about will be purely informational, factual, or satirical. It does not constitute financial advice. Go see a accountant, go see a mortgage broker, go see a financial planner. If you do want to discuss your specific financial needs, if you are looking at purchasing property, then please don't hesitate to get in touch. I'd love to be able to help you. So in terms of how Brisbane's been performing over the last 12 months, you can see there that the rate of growth has been tapering off since April 2024. Now it is still growing, although meager. You can see that the rate of growth in on a monthly basis here, or the quarterly change here, has been it's been coming down, long story short. So those quarterly changes on a month-to-month rolling basis have started to come down. So we were looking at rates of growth between 4 and 5% per quarter, and then that started to taper off here. So you can see the rolling quarterly change is down around that 1 or 2% now as we come towards February, March, and April. And as a result, the annual rate of growth there has changed as well. Over the last month, Brisbane dwelling values, according to CoreLogic, have come up 0.4, over the quarter 1%, and over the last year 7.8%. And lastly, it's important to note that Brisbane dwelling values are at a record high. So that record high is, you can see somewhere around here, that record high in terms of growth was around 30% annual change as we come to around, it looks like November 21, January 22 there, the peak rate of growth there. In terms of Brisbane's performance as a stratified hedonic dwelling index, we have here the breakup between lowest 25 percentile of values, middle 50% of values, and the top 25% of values for Brisbane overall. You can see Brisbane predominantly here, the lower end of town is performing the best. And that's because I feel that affordability is starting to bite, and we're finding that a lot of people are looking for value out there as well. Typically, when you have a bit of a slowdown, it's the top end of town that feels it first, obviously because of affordability, and they are the least affordable properties out there. The middle 50% isn't too far behind the bottom 25%. So that could mean that there's still some further growth in the short-term future for the majority of Brisbane properties. In comparison to all the other capital cities there, it still looks like a standout performer for all capital cities aside from Darwin. Darwin's gone through a bit of a boom lately, and you can see that all sectors are performing relatively well, and namely the middle 50 and bottom 25% of Darwin. That's been happening for the last few months and now, probably towards the end of last year, beginning of this year. In terms of how Brisbane's been performing over the last 12 months on an index, we can see the breakup in terms of the housing value index by suburb. You can see here that the south side, or the inner south here around Forest Lake, is starting to come down a touch there. You can see that there's some properties, or the housing value index rather, has come down in value. Around the Ipswich area here, we're still seeing growth on a 12-month basis here. So the suburbs around Ipswich, there is a fair bit of development out there, and more notably, there's a bit of expansion. Funnily enough, the population growth for the LGA of Ipswich in general is seen to double in value between the ABS of 2021 and the ABS of 2031. So the two forecasted population growth is roughly 100% population growth in that 10-year period. So more notably, there is somewhat more demand out there than other areas. And you can see that in terms of the performance over the last 12 months. Bought a couple of property out in Ipswich about 18 months ago, 24 months ago for a couple of clients, and they are doing very well out there as well. In terms of the rental change, you can see rents are actually starting to come down in your inner city suburbs there as well, and they're not growing by as much as we saw in previous years. Rental growth is between 0 and 5% in most cases, if not 5 and 10% in some cases. You can see a bit of a cluster in the north where rents are rising there, and then towards the southeast as well, we've got a bit of a cluster where rents are rising between 5 and 10%. But by far and large, inner city rents have started to come down, and then we're looking at a number of the outer suburbs where rental growth is starting to return to somewhat average rate of growth there. If we have a look at the vacancy rate for properties in and around Brisbane, you can see that the vacancy rate is closer to 3% in the western suburbs. As we start to go out to the further west, you can see this area up here in the northwest there is starting to see vacancy rates dip to those, between 0.5% and 1% there. And then we've got a bit of a mixed bag as we start to have a look at some of the inner city suburbs here, especially around Indooroopilly. Logan is a fairly average rate of vacancy growth there. Logan, Springwood, and the surrounding areas. As we start to get further out towards Beenleigh there, they're starting to get towards the average rate of vacancy. So it's dependent on where you see or where you're looking to purchase, will depend on what the sort of vacancy rate is and the rental pressures for rental demand out there as well. If we look at rental yields are really low in the inner city suburbs. We can see rental yields of, we're looking between 2 and 3% there. As we start to go further out of the city, especially south around Logan, we can see there that rental yields are starting to come up. But at the same time, there's nothing more than a 3 or 4% rental yield there. So take that into account when you're starting to work out your ongoing cash flow viability there in terms of holding costs for property as well. So look, not any fantastic rental yields. In some areas, you can find rental yields of 5%. At the same time, you really need to be considerate of your long-term cash flow needs there. In terms of the number of property listings, you can see that Brisbane has an overwhelmingly sharp decline in property listings, specifically over COVID, and the decline in supply would have contributed to that massive annual 20 to 30% price growth year on year that we saw there in one of the previous slides. Supply did pick up between 22 and 23, and then you can see a definite downward trend in supply. It's come down below 15,000 properties on the market. That was towards the end of 2024. It started to dip up. Typically, we have that seasonal peak there, but you can see there from sort of end of 2022 right to the end of 2024, and even towards the beginning of this year, you can see a trend in the declining supply of property. In addition, you can see that the property is still taking the same sort of time to sell proportionately. You can see there that the over 180 days are taking just as long to sell proportionately. Then we've got 90 to 180, 60 to 90, 30 to 60, and then lastly, less than 30 days there. So proportionately, they're still selling in the same sort of time frames, albeit there is further declines in terms of the number of property listings available. In terms of the weekly number of rental listings, you can see that rental listings have actually come up. There's a number of seasonal peaks there that you see in December and January there. And that being said, at the same time, you can see that the number of rental listings has increased from the sort of early 2022 there when we came out of a number of lockdowns. You can see that we had a sharp decline in the number of the rental listings, and those rental listings have been increasing, albeit because investors have started to enter the market and make rental properties available. Overwhelmingly, those properties, though, are still being rented out in less than 30 days. So you can see there that property is still in demand in terms of the take up, the absorption rate of properties. And at the same time, what we're seeing there is even though more rental listings are becoming available, they're still going in less than 30 days. And then proportionately, you can see that those properties that are there between 30 and 60, 60 and 90, 90 and 180, they're still being rented out within the same sort of period proportionately. So even though we're seeing more trend in terms of rental supply, we are still seeing that those properties being absorbed. And that's why we're seeing still vacancy rates of 1 to 1.2%. And we're not sort of seeing any blowouts in terms of the number of rental listing, in terms of a turnaround time to have those rental listings taken up. So this is a bit of a case study for a property that's on the market at the moment out in Logan. It sits on a fairly small block of 216 square meters. It's a 4-bedroom, 2-bathroom, 2-car house, a standalone home. It has a list price of low to mid 700s. We're going to assume a purchase price of 750. We'll call it 750, even if you want to call it 730, something along those lines. At the worst case, 750. We've got stamp duty and upfront costs of roughly 35,000, which is mostly comprised of, those upfront costs are mostly comprised of stamp duty. In addition, we've got your conveyancing fees, your bank fees, transfer duties and charges and that sort of stuff. But the vast majority is Queensland stamp duty. The rental appraisal on this one is 3.9%. So you'll get around about $565 per week. Estimated council rates of 3,000. Your water rates are $800 estimated on that one. A quick landlord home and contents insurance premium from, I think this one was from AAMI. I did a quote through this one of around about 2,500. So look, give or take $500 on that, depending on which insurer you go through or your level of excess as well. And then your average property management cost of 8.8% on that one. I haven't included any admin or petties or anything along those lines. And then nothing on maintenance or incidentals on anything like this as well. The only other charges that I'd expect on this one is nowadays you need to ensure that your smoke alarm is back to base and it's tested every year. This property looks fairly modern. So that being said, I feel that's got not a back to base, rather it's a standalone supply, not a battery supply. So it needs to be hardwired into the home. And look, I feel safe that this property has that as well, but it still needs to be maintained on an annual basis. Normally comes at a fee of $100 to $150. So look, that being said, the upfront cash flow on this one, you'll need about 20%. You might be able to get away with, less than that, depending on if you want to pay lender's mortgage insurance, but 20% on an assumed purchase price is $150,000. Plus your stamp duty and upfront costs of $33,000, that's $183,000. Then you're still left with a debt on this one, assuming interest only at 6.5%. Look, that's for an investor. You might be able to get sort of high 5s in terms of interest rates, maybe even low 6s for an investor. Let's assume, worst case 6.5%, maybe a second tier lender, something along those lines, of $32.50 per month. That means that on this property, once all is said and done, you're going to do a net before tax annual loss of $18,650 or out of pocket just under $360 per week on this one. So that's a bit of a case study for you there. So look, thank you everybody for taking the time to watch this video. If you do have any questions, please don't hesitate to reach out. I'm also happy to announce my mentorship program where I look to guide people throughout the journey of purchasing an investment property. So if you don't want it done for you, then I'm more than happy to do it with you in the form of this mentorship model. It is a 1-day full face-to-face, full-day face-to-face workshop environment, classroom environment, where I will teach you the process of purchasing an investment property. We will also meet one-on-one in a strategy session where I'll help you understand what goals you're likely to achieve and how you can achieve them through purchasing property. And then there'll be 6 months worth of mentorship in an online forum where I'll answer any questions that you might have, give you access to financial services professionals to answer those questions, and also provide you the right guidance on a case-by-case scenario. And you can post your questions in an online classroom environment as well. So if you do feel that you don't want it done for you and you would like it done with you, then please don't hesitate to reach out. I'd love to be able to help you out. But apart from that, if there aren't any other questions, I'll do a quick check for questions. If there aren't any questions, thank you very much for watching, everybody. Have a great evening, and thank you for joining me online.